Good morning and welcome back to Almus Market Mornings. We begin this week on the backdrop of updates from last weekend. On Friday night, a federal appeals court ruled that the tariffs were illegal. The court upheld the May ruling by Court of International Trade that the tariffs were illegal, but the levies have been kept intact until the case proceeds. Moving on, US PCE was broadly in line with market expectations, with headline rising 2.6% year on year and core rising 2.9% in July. When it comes to moves, we had a lot of action. The USD INR hit all-time highs and in fact broke and closed above rupees 88. Good morning, JK. What is next for the rupee? I think everyone wants to know all about it. Are we going to see some runaway depreciation which happens whenever rupee makes a fresh low? What is your take?
Good morning, Swaraj. Yes, I think this move in the rupee definitely has happened with the blessings of the central bank because all along in the last 4 months, uh, uh, 3 to 4 months, RBI has intervened whenever it went near 87.80. And on Friday, it was seen that they were not there. And so the market quickly uh, uh, had to contend with stop losses above 88. And then the move was very swift towards 88.30. Uh, Now, going forward, yes, I think considering the overall situation where our exports are getting challenged due to high tariffs and the government measures and the strategies, fresh strategies by corporates are going to take some more time to take result. Uh, I think government RBI would be okay with a weaker rupee for some more time. And technically, of course, it's such a break, and I see possibility of move above 89, definitely on the cards. Only if it becomes too volatile or if it becomes too speculative, then we could see some intervention. But I think a gradual depreciation is again on the cards for the rupee towards 89 plus, and psychological 90 also on the radar of markets, but that depends on how things evolve over the coming period in the global markets. And talking of rupee, of course, there are also some other mixed news. GDP growth surprised to the upside by coming at 7.8% for April June quarter, and this was helped by a strong service sector activity, and even the private consumption and investment was slightly surprising. So we had 7.4 for Jan March 25. That has been surpassed, and the even the previous Q2 of 24-25 was also lower at 6.5%. This is a good news, no doubt. Of course, we had to, since this is a backward-looking number, we had to see how things come out in the coming quarters as we face new challenges. As of now, a projection for the full year growth is at 6.5%. Of course, other development on the rupee is the realignment of global geopolitics, in which India has now become a closely watched country, particularly in view of China and India forging new ties. There is a summit that is held in China, where apart from China, India and Russia are also taking part. A lot of relaxation in Chinese trade, China-India trade. India is allowing 20 to 25% Chinese investment in select sectors, while China is also, relaxing some of their export items. There are direct flights. So this is a new China-India relation that we are looking at. Then, of course, then on the negative side, we saw the Trump administration asking European countries to impose fresh sanctions on India. So, leave alone, a revision to the higher tariff. We are, Trump wanting more sanctions on India is speaking of how bad the mutual relation between India and US on the trade has become. So, exchange rate is definitely weak, and it will remain weak for some time. And this is happening at a time when the real effective exchange rate is obviously nearer to fair value, or maybe lower than the fair value. So we are probably going to see an undervalued rupee for some time. this could compensate partially to the exporters. On the global market, again, there was a focus on inflation. Inflation from US PCE number was published, and the year-on-year core PCE inflation rose to 2.9% from 2.6% in the previous month, and that was higher than expected at 2.8%. The energy costs actually brought down the inflation number, while there was increase in it masked actually the increase in food prices and services. So there is a mixed picture, but even if the number is not too much deviating from expectations, the fact that it remains so well above the Fed's target of 2%, indicates some uncertainty about future easing. Although market still is discounting 87% probability of a rate cut. We'll of course wait for the non-farm payroll report, which will come on Friday. In Germany, of course, the inflation rose more than expected, and while there were negative news from retail sales and employment side. So there's a mixed picture in Europe. European Central Bank is in a dilemma about the interest rate. So I think could be on hold in the next meeting, but if the economy does not perform well, there could well be another rate cut there. Japanese headline inflation eased to 3.1% from 3.3% in the month of June. Again, this was helped by falling energy prices and also a lot of subsidies that the government has been giving on the. Again, this masked the food prices, which accelerated 7.6% from the previous month, 7.2%. So I think the picture in Japan is again like in the US. The inflation rate is much higher than the target of 2%, and possible, I think Japan will increase their policy rate by 0.25% in October. That's the market expectations. So overall, we have seen the dollar index remaining still in the range, slightly to the weaker side, expecting the rate cut in September. However, we will see the upcoming data on employment. While of course, as we begin the new month of September, we also have to be mindful of the fact that the September has been one of the worst months as far as the stocks are concerned. And out of historically, it has been one of the weakest months, including US and many other major markets. Data shows that since 1945, for S&P 500, an average return is minus 0.7%. And MSCI World Index also shows negative average returns in the month of September. And we all know that markets are trading at their historical highs. And we might well see a correction in the market this month. And also, the summer period ends with this first week of September. So we might well see a new trend there. And of course, talking of legal matters, we have two cases, interesting cases in US that's running. As you mentioned about the federal court, delivering a significant decision about Trump's tariff not being illegal. Although he has been given time till October 14 to consider an appeal in the Supreme Court, which I think they will definitely do. The other case that is of interest to the market is the Lisa Cook, the Fed governor, who has been fired by the Trump administration, but she has filed a case before the federal judge in a bid to temporarily block this, and continues to pursue a lawsuit. And because she says that he has no valid reason to remove her from the Fed board of governors. So this will be a long legal battle that will continue. So the markets are having a lot to digest as we enter the month of September, and major players return after vacation, and we could well see a lot of movement starting this week itself, and definitely after non-farm payrolls and heading into FOMC, see markets becoming more volatile. Thank you.
Thank you, JK. And we have lots and lots to look forward to There's geopolitical realignment which is happening. The pressure on India is of course on because Trump administration has recently asked the European countries to put sanctions on India. All of this keeping the sentiment for the rupee weaker, which has already broken above rupees 88. Maybe as JK mentioned, we are going to see a move towards 89, 90. But I'm sure the central bank will also be active so that there is to curb any undue speculative moves. When it comes to the other global markets, so we have got the NFP to look forward to this week. We also have two crucial legal cases running, which is the Federal Appeals Court ruling, which is on tariffs, and of course the Lisa Cook, Governor Cook's removal. And she has already filed a case to block her block the removal. When it comes to inflation, US PCE core was at 2.9% year on year. Uh, there was a fall in energy costs, which masked the higher services prices. Inflation remains above Fed's target, but markets continue to discount a rate cut in September. Japanese inflation eased to 3.1% in July, and interestingly, we are here pricing a rate hike in October by the BOJ. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.